Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, so look, they took it up yesterday to, right around 53, 54. Then they rejected it over the course of the afternoon. You had a hard sell-off from 2 o'clock on, came right down to test the new weekly pivot at 2609, and that weekly pivot held like a champ. You can see here. Here's your sell-off. Weekly pivot holds. So you've got another higher low here, here. You've got a series of higher lows. There's your 52 low here, here, and here. So what do they need to do? They need to produce higher highs. You've got the daily mid-band sitting up here at 66. So right around here. Then you've still got the monthly pivot here. You've got the 100-day sitting up around 2671. So daily mid-band, 100-day monthly pivot. So 66 to 77 is an area that if the bulls continue to follow through to the upside, that they're going to have to deal with. Ultimately, you get back to the 50-day exponential moving average at 85.44. That's what it bumped its head on back on March 22nd and headed lower. So it's a big day for the bulls to see if they can follow through. If the bears can hold things in here underneath 77, even if we chop around all day, they're in a decent position. But ultimately, the bears have got to convert that weekly pivot. This is a really bad look. That's a really bad look. You come down, and here you are, and then you got nothing. So look, you had news here, you had news here. So it kind of, they cancel each other out, and we're trading right around where we were yesterday before the news broke. So now it's kind of a, it's like football. You had offsetting personal fouls. Now, we're going to replay the down and see what happens. The advantage, as long as we're above weekly pivot, though, goes to the bulls. However, you bump your head up here again and head back down, you're going to get another hard push. So the ultimate takeaway is we remain in a very volatile, trader-friendly tape, which has been fantastic. So Room did about 38 yesterday, which was excellent. We're going to head in today and just do the same thing that we do every day, which is try to find our four handles and move on to Wednesday. And whatever else the market gives us is fantastic above and beyond there. But you just want to respect price, respect risk, and the other key to this market is, at least with the futures, it's a flipper tape, meaning you've had to kind of you have to, if you're doing something that's not working, you have to be willing to get out of it, get into something that is working. Yesterday it became pretty clear that this breakout was not going to follow through. So we played around a little bit buying this dip in here, and then when it didn't work out, we had to flip, get short, got short at 40, and then turned into a fantastic trade. What you can't do is get stubborn, sit there like a deer in headlights, and then all of a sudden, you're down 10 or you're down 20. It's one of the reasons why we use a 5-handle disaster stop in the room to kind of mitigate that stuff. But you have to remain flexible of mind in this tape. There's no room for ideology in this tape. There's no room for stubbornness. There's no room for an agenda. You have to flow with price. You have to flow. Wanted to go up, wanted to go down, wants to go up. It doesn't matter. Just get on the correct side of the freeway, and you'll be fine. But you have to recognize when one side or the other is losing its grip. All right, everybody have a fantastic day. I will get some stuff out on social later on. I will talk to everybody then. And until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.